Hi everyone, in this video I'm going to show you how to trade the USD pairs, in specific EURUSD and GBPUSD, and how it correlates to the DXY. So first of all, when you do trade the USD pairs, you always need to make sure you look at the DXY. So that is what we're going to look at first. So how do you get started? If you go on tradingview.com, load up your chart. Top left corner, if you search for DXY, which is a dollar index, we're going to start on the weekly time frame. So each candle represents 1 week of price action. This is where we just want to mark our support and resistance levels. So if you've been watching my previous videos, you should understand and you should pick up how I mark support and resistance. If you don't, you need to watch my previous video, guys. I'm literally just repeating the process all the way to an entry time frame. I mark my support and resistance here. We're then going on to a daily time frame. I can see there's a resistance here on the daily, and here's the support. So what does that mean? When price is at this level, we can expect it to go down, which it has. When price is approaching the support, we can expect it to go up, which it most likely will. However, if it doesn't and it breaches it, it'll retest it. So support now acts as a resistance, and then would go down to this level here. So the daily always helps us indicate where price action can go next. So at this moment in time, it looks so it might just retrace to the support before it goes up, but then again, like I said, could breach it and go down as well. So that's how we use the daily time frame. If you go into the H4 time frame, you want to repeat the process again, where you have resistance here, and you have support here. So currently it's at support, and you can see it's an inverted hammer, well, a hammerhead, so it indicates price could potentially go up. So we'd only go to the H4 on the DXY. So now that we've done the dollar index and looking at the previous, we can see prices potentially at support. It could retrace back up to this level here, or like I said, it could push down further and retest it to the daily. So we'll have to wait and find out. So now that we've done the DXY, let's have a look at the EURUSD price action. So if you search for EURUSD in the top left corner, you always want to start on the weekly time frame. And once you're on the weekly, you want to mark your support and resistance levels. You then go into a daily time frame. You want to repeat the process once again, marking support and resistance. So it looks as though it's formed a double top formation. It's currently at a resistance. We can expect price to reverse from this level, a potential reversal, because remember, the DXY is at support, well, potentially at support. It could retrace a bit further down to the daily, but it is a case where it could go up, and if DXY goes up, EURUSD goes down. So there's a negative correlation between the DXY and EURUSD. So as I said, I'll say it again, DXY, if DXY goes up, EURUSD will go down. If DXY continues to go down, EURUSD will go up. So whatever happens in the DXY, it's the opposite on the EURUSD and GBPUSD. So that's how you remember it. It's a negative correlation between the DXY and EURUSD. So as you can see, the price action, it does indicate it could potentially go down, but let's have a look. So we've done the daily. Let's move on to the H4 time frame. So I'm just marking resistance on a H4. Let's make that yellow. And you want to mark your support as well. Once you've done that, you want to go into the H1 time frame, and you want to use your Fibonacci retracement tool. Sorry guys, I've just got a bit of lag on my computer here. I'm just waiting for it to load. Okay, so H1 Fibonacci retracement tool. Today is a Tuesday. Yesterday we didn't trade because it was a bank holiday in the UK, so we used yesterday's price action. These are the levels that you would have used before the market opened. So this is what I should have done last night, but I was away. I didn't have a chance to do so. So these would have been my levels before when market opened. As you can see, price in the Asian session, price, reached the 50% fib, and it increased, was bullish momentum, broke through resistance, now acting as support, and it reached the minus 61. So in the Asian session, there would have been traders, institutional traders, who would have bought. They would have bought here with a stop loss there, and their TP target profit would have been minus 61. But as I only trade Asian session, I only trade London session, I do not trade Asian session, so I've used this indicator here, which is highlighted in blue in the background. If you can see it, this shade of color represents between 8 o'clock in the morning and 4 o'clock. So once we've done that, you can see price has actually breached it. So this would be our new updated level now. And because it's at a daily, it's also at H4 resistance, and now it's at H1. You could look for an expected reversal. And looking at the current price action, you can see there's a massive bearish engulfing candle right now, which indicates sellers are into the market. And also you can look at this RSI indicator, which shows that it was at 70, and now, which indicates it's overbought, and now it's going to retrace down. So that is a secondary indicator which shows that it's a good time to sell. And this is live price action at the moment on Tuesday the 28th. So I'm going to show you a live entry because this is exactly how I trade. So I highlight the candle on H1, then I go into an M15 time frame, highlight the candle that I'm interested in, use this tool here, the short position, because we're selling. My stop loss would be just above the high, so it would be 13 pip stop loss, and my target profit would be to 32 pips. So the risk to reward ratio would be 2.36. So let me just go ahead and enter that on MT4, if you just give me a moment. So if you're trading £1 a pip, you're risking £137 to win £323. And if you're trading £10 a pip, you're risking 1,300 to make 3,200. So obviously, to improve your risk to reward ratio, you usually would like, a smaller stop loss. However, if I entered this candle here, you see that I'm risking 6 pips, £60 to win £400. That's a risk to reward ratio of 6.7. That would have been better, but unfortunately I made this video a bit too late. If I made this video about half an hour before, I would have been entered the trade a bit earlier, but it's fine, I'm still in the trade. But remember, you want to only trade close to the level or on the level to improve your risk to reward ratio, and to reduce your stop loss as well. So this is a current trade that I've entered. Let's see how it goes. We'll then look at GBPUSD. So we'll start on the weekly time frame. Always start on the weekly. This is DXY, sorry, we're looking at GBPUSD now. So remember, you always start with support and resistance. It's high or low there, so I'm marking as support. Where's your resistance? Potentially here. Come on, H4. Marking support and resistance once again. Here's a high or low. Potentially higher high here. We'll have to wait and see. Then go into the H1 time frame, and like we did on EURUSD, get the Fibonacci tool out, which is this one here. Today is Tuesday. We look at the previous day's price action, so from the low to the high. So these would have been your levels when the market opened this morning, 8 o'clock London session. These would have been your levels. So 8 o'clock in the morning, you could have entered a sell trade here. It would have been a good loss because you're trading on the level, you're trading within a London session. Your stop loss would have been here. DXY is currently at support. It does indicate it's potentially going down. So you're risking 10 pips to make 43 pips. Remember, you only need to win 4 trades out of 10 to be profitable. So if I was trading this morning, I would have entered this trade and I would have lost, which is fine. I can accept it and move on because my analysis is correct. However, now that we've had to update the levels, so price is currently here, it's approaching the H1 and it's at a daily resistance. We can see a potential reversal from here. So similar to EURUSD, if you would enter a trade here, you can highlight the candle, go into M15 time frame, and you can put your stop loss above here. I usually have a stop loss about 10 pips, and then your TP would be here. That would be TP1, or I think 50% fib, and then that would be TP2. So let's see, that's 38%. So price would be expected to reverse here. So that would be your TP1. So you'd be monitoring the charts at this, around this price action, to see where the price does potentially reverse from here. Because remember guys, price doesn't always go where you want it to. It can go down from here, and then it could just reverse back up. And if you don't bank your pips in, the price will reverse and you lose a trade. So that's where you got to monitor the trade as well. So that would be TP1, and then if it breaches it and it goes down further, this would be TP2. Target profit 2. So as you can see, I'm risking 9 pips, 10 pips to make 60 pips, 58 pips. So what's that? £100 to make £600, £1,000 risk to make £6,000. Risk to reward ratio of 6. So this is how you do your risk management in terms of trading as well. You know, it's not gambling. A lot of people say Forex is gambling. It's not gambling when you know how much you're going to lose, and you know you got to treat this like a business. When you're working 9 to 5 on the charts, you know that you can only trade during these times, and you can only have a risk to reward ratio ideally above 3 or 4, and you're only risking 10 pips each trade. Then you know how many trades you're going to win, how many you need to win, how many pips you need to make to be profitable. So those people that say it's gambling, tell them to shut the fuck up, because majority of these fuckers don't know anything. This is a serious profession that can make you a lot of money, but again, it takes dedication, commitment. It takes a lot of education, a lot of trial and failure as well. So if you genuinely want to make this a living, you can do it. Anyone can do it. You're just monitoring the charts. You just have to practice. That's all it is. But a lot of people don't want to put the effort in. A lot of people will try it for 6 months or a year and they'll say, oh, it's a scam. They don't want to do it. So remember guys, you know, in Forex, you got to be serious with this, man. Like, You got to think about these institutional traders that are working on the trading floors at these, you know, massive institutions, JP Morgan, Chase, you've got BlackRock, asset management firms. You know, they're paying six figures for these traders. It's a serious profession. So you got to take that into account as well. This isn't a get rich quick scheme. You will fail, of course you will fail, but you got to understand you only need to win 4 trades out of 10 a week to be profitable. You're not chasing the market, you're going to be comfortable doing that. So I've just shown you here on GBPUSD a potential trade setup. It's not ready. It's at resistance at the moment, but you got to wait for a bearish engulfing candle before you can enter the trade. So I can monitor this one. However, I've already entered on EURUSD, and look at that. What a perfect entry on the H1 candle. So fingers crossed, my entry is correct, my analysis is correct. I'm just waiting for it to go down and potentially make, risking £1,300 to make 3,300. So that would have been better. That would have been a very, very good entry if I entered right here. But I've missed it by 45 minutes, so what can you do? But anyways, I hope you enjoyed that session. I'm just showing you how to trade DXY, how to trade the USD pairs, but more importantly, how you analyze the DXY and how it can help you indicate where price is going next. So at this moment in time, it looks as though price is going to go up from here, and EURUSD is going to go down. So that's a live trade I showed you as well. I hope you enjoyed this session, guys. I am currently in development of a website and a course because I've got a lot of feedback that you don't understand candlestick analysis, or a beginner's guide on Forex trading. So that is in the process, as well as a potential subscription service that I will be charging. So I can show you how I'm entering and exiting the trade every single day. So whatever I trade, you'll be trading with me. Any extra knowledge that I kind of give you, I will be doing that. Obviously on YouTube, my information is limited because each video is 5-10 minutes long, although this is approaching 20 minutes. So I hope you enjoy that session, guys. More to come. Like, share and subscribe. Peace.